institutions. When institutions think about allocating capital on chain, it's not just about the asset, it's also really about the chain and the credibility of that ecosystem, of the people that they are working with. They're not just going to go and invest in any type of asset on any type of chain. So from that regard, Ripple was a very natural choice.
And while OUSG is an asset meant for accredited institutions, we have many developers here at Apex building in this space. So
just gonna listen to this for a moment, then we'll talk about
away from
the subject.
OUSG coming to XRP Ledger and the blossoming kind of tokenized treasury ecosystem taking place on the chain.
Yeah, I would say, OUSG is really, it's only one asset, it's only one category. Yeah. It's really in treasuries. But increasingly, I would prepare for a future where it's not just about crypto and stablecoins and now treasuries. It really is going to be anything that you could possibly want on chain. Any type of financial asset is going to start moving on chain to certain chains, right? Where there's already liquidity, where there is adoption, where there's institutional pedigree. But people should really also in this room, I think, start to prepare for a world in which all the assets are moving on chain. Financial services increasingly are becoming 24/7. And for the very first time, like in the next 12 months, I think you're really going to be able to compete or build products that were not possible in legacy finance for the very, very first time. Like if you look at the history of blockchains and crypto so far, there's been a lot of proof of concepts. A lot of the blockchains have really gotten more robust. We've had DeFi that really provided a lot of interesting use cases and mechanisms and technology that really work. But a lot of the critique so far has been, it's a meme coin casino. What's the point? There's only crypto assets. And to an extent, that's kind of fair because people want to buy the Tesla stock and the NVIDIA and the S&P 500s, and that's what they think about when they think of finance. But for the first time, those assets are going to come on chain a lot sooner than you think, and as a developer, I think you can really take it to the TradFis and build something that's significantly better than what they can offer.
It's going to be...
So, 10 years ago, in the space of crypto, we were waiting for the time when serious business and governments would get on this technology. This moment is now. And so this is a new company. And they have a coin, Ondo. Pompliano, I think he's not CEO, but he's part of that as well. And personally, you can go down a lot of rabbit holes. With crypto, you can go down the meme coin rabbit hole, Solana ecosystem, and Ethereum and tech. And, I would say prior to today, and this reattached to the philosophy of the videos that I'm putting now, which I will mention. But prior to today, we were talking about technology with these different cryptos, these different blockchains that offer different services, really, and they all use blockchain, but they've tweaked it for the service they want to offer and promote. For example, this is a computer on a blockchain. That's pretty sick. Any browser can connect to it and compute. It's like, whoa, I have access to a computer and soon to be like a supercomputer. So that's pretty cool. Compound. Well, how about I compound my interest and obtain yield, right? So there's different project. Arbitrum is a chain for chains. And so it will have low fees and other blockchains can build over it in order to appreciate low fees. Algorand is made by, is it MIT and some, professors there and experts. And MIT is linked to the government, the United States, and so they're trying to be compliant, right? So there's a lot of these different projects. They all represent a different idea on what's called Web 3.0. So we were technologists, for example, wonder what does the web look like after Web 2.0, right? And we found it with blockchain. Blockchain is Web 3.0. It's decentralized. It's not controlled by any entity, and it's managed and owned by people or industries and players in that industries, companies, but also governments can all be owners of Web 3.0. And so here is the Ondo summit that happened, I think, beginning of this year. And we can see here, personally, that's my favorite rabbit hole. You know, we're looking at people from BlackRock, Fidelity has been in the blockchain technology. I don't think we see JP Morgan here, but JP Morgan, for example, does not like Bitcoin. They don't think it works. But Jamie Dimon, CEO of JP Morgan, has said, God bless the blockchain. So they have been working on this space for 10 years, and they appreciate the decentralized nature of financial truth that represents blockchain. And here we see different names. For example, Chainlink will come back often in the discussion with Sergey. Chainlink specialize in linking projects on chain, and especially projects that are not very good with linking to other blockchains. So there are some of these that are better at it, and interoperability leaning. So they like to branch on other chains, because you can do that. You can branch chains together, bring value from one to another, do some things on that chain, bring the value back to another chain, do something else. But Chainlink is helping onboard traditional finance on DeFi and crypto projects, blockchain projects. For example, if there's some asset managers, Fidelity is not necessarily the right one, but any other, and they would like to bring their asset, 4 trillions worth of asset, on JP Morgan project. JP Morgan, the biggest bank in the world, they have blockchains, and they want to use that to save fees, through with their infrastructure. They'll save a lot of fees. Well, Chainlink can help, any company. But all these companies have blockchain research. And here I see some names: Ripple, Chainlink, Ondo is here, and I don't know if we see many more. Uniswap, right? So these are crypto. Let's see. They are crypto projects. Sorry, I'm just looking at technical difficulties here. So I'll just present them. We have Ripple here, XRP. We have Chainlink. And we have Uniswap, right? And this is CoinMarketCap. If you're interested, all coins are listed by market cap, which means the total amount of money represented by the coins. So there are, for example, that much Bitcoins. No. Here, circulating supply, that many Bitcoins times the price will give you the market cap. All right. Same thing here. 120 million ETH times 3,000 will give you naturally close to 400 million. Or is it trillion? Billion dollar market cap. So that's personally my rabbit hole. Let's go back now to the subject of the video, risk management. So this video is just an example of structure. But why not stay here for a second? This with Ondo here. This is where we wanted to be a long time ago. And, you know, when crypto sits down with the CFTC, that's the United States government, Wellington Wisdom Tree, CFTC, we see Citibank, this one, Wilkie Farr Gallagher. These are big names in traditional finance. MasterCard, right? And we see also other big names in blockchain projects like Damon, A16Z maybe, don't know much. Pantera, Galaxy Digital. So BNY Mellon, Franklin Templeton. So BNY Mellon again comes back as custodians. DTCC. This here is very important. DTCC is the digital part of Compliancy, and they've partnered with Chainlink and others to try to plug traditional finance with blockchain technology, because the issue right now is that they don't plug together, and they don't plug because of KYC, know your customer. That's really important in traditional finance. You got to know who you're trading with. You can't be trading with, bad people, right? And bad money and stuff like that. So how do we make this automatic, right? So that billions, hundreds of millions, and trillions can flow with KYC technology, compliance, and all these other things that matter for traditional finance, right? We have the former Speaker of the House, Chair of Financial Service Committee, Patrick McHenry, seen it in the Speaker in the House. Fidelity has been around, BlackRock has been around. So I like what Ondo's doing. Now, that's why I say the day is today. Okay. And I'll make another video on understanding Bitcoin, for those who just need to understand it, right? And they're still like, I don't know what that is, right? So I'll make a video on that. This video is kind of part 3 here, where it's more about, okay, well, let's say you have $100, right? Or you want to put money in crypto, and how do you do that, right? Well, we've talked about some exchanges, Coinbase, Kraken, Wealthsimple, Robinhood. You can get on all of them, and all of them are banks, so be prepared to show ID, okay? But they're all traded on the stock market. From my knowledge, they're all overcoming, and they're big. They've been battle tested and against hacks, but also stand the test of time. They've been around for some time. But as long as crypto is not legal, what is it called? Legal tender, then the bank can't compensate you if something happens, or the government can't compensate you for money loss. And I guess I have to say at some point that in my video that this is not financial advice. You should only invest what you're able to lose. Amongst all these things, I'm not a financial advisor. All right, even though we're going to talk about risk management, but there's been lessons. So for example, if you have 20, you want to put $25 in it. Yeah. Then don't think about it too much. All right. Just get something open, buy $25, and just let it sit there. I don't think you need to work too hard for this. And it's just $25. Let's say you want to put $100, right? Well, now if you want to put $100, okay, you can buy $100 of Bitcoin, right? Or $100 of Ethereum, whatever, on Coinbase. Just let it sit there. Now, first I want to talk about the philosophy. Today, my philosophy is that Bitcoin is king. Okay. That's my philosophy today in 2025. I think I and many others, we share the idea that the Bitcoin represents the actual savings account of your internet money. And some can ask, well, why do we even get into that subject? Why the fuck do I even care? Well, it's because of the returns, right? We're doing 10x every 5 years or so, okay? So that's why you care, and why people care, and why finance cares, because that's what, part of finance is funding, but also yielding and returns. This is just a domain of finance. Finance gives a fuck, right? And if you have, I don't know, $1,000, and you want to take $100 of that and put into crypto, you'll be better off, most likely, because it does a 10x, every 5 years, which is better than any other asset that you can trade or any other stock. Just is. Bitcoin returns 150% year over year. So that's the why. Now, philosophy, mine, is that Bitcoin is king. It is the savings account, and the other ones are like stocks. You're betting or gambling on a specific company or project, and so is capital, right? Capital don't like probably to be called gambling. They are investing, right? But what they're really doing is managing the risk associated to the investment. But I play a lot of poker, so it's also a gamble, because you never know. I mean, something happens, and either it's a hack, or it's a system issue, or it's a bad actor, or it's a human error, like they forget the password to the fucking platform that they manage, whatever it is. So that's risk. But there's also risk where you lose your coins. You fucking fuck up. You know what I mean? I did that, right? I sent my money to Quadriga, for example, in 2017. Lost that. And I sent too much. I could have sent less. I could have kept some. And you'll make a lot of mistakes. And just like we all do. We most of us could have been millionaires, But most of us will say that we could have been millionaires, but we fucked up multiple times, and that's normal. That's all right. But if you're a technologist, right? You like technology. You like where it's going. Then I think you're interested in blockchain. My next video will be, what is Bitcoin? How does it work? Why do we care? Why is it real? Even though it's code and it's on servers, but that's still real. But the philosophy is this: Bitcoin is first because of how bare it is, and the more bare it is, the more robust. Just like a Linux system is more robust than a Windows system, because Windows opens more doors for more services, whereas Linux, or a different Linux, can close all these doors. We don't need them for just basic functions. So the more basic it is, the more secure or robust and hack-proof and tamper-proof and those things. Whereas Ethereum opens doors to contracts, and people can make bad contracts. There's bad coding. There's other actors and you know, other issues were not foreseen. You need to study math and graphs a little bit to understand what happens at the limits of systems. And anyone who's done a higher level math course understands limits, and how when you go to infinity, what happens? When you go to zero, what happens? You know. And I know that some people make contracts, they haven't had a math class or finance class or statistics class. So my philosophy is Bitcoin first and then projects after. And that one day may change. You know, Ethereum provides yield, Bitcoin does not today provide yield. So Ethereum is better in terms of where your money should be, finance wise, because it's, again, not financial advice. It's not an advice, it's just the idea that this generates a yield, whereas this does not. It does say here, for example, with Coinstat or whoever they're partner with, you can get 4% annual yield. Okay, so that's the philosophy. Okay, that's why you'll see Bitcoin being higher. And then the rest is, you know, blue chip. This a lot of this is blue chip here. Meaning top 10, top 20 projects. And then as we go down the list, we're getting further. These are like top 50 project, top 100, and some project. And as we go down the list, we see more and more the numbers, top 300 project, etc. So if we go down, we see the number here. As the market cap goes down, right, the number goes up. And what does it mean? Well, it means it means understanding of the technology, it means trust of the technology, and it means usefulness of the technology, right? This market cap. So if you don't know about it, you don't invest in it. And if it's not battle tested, battle proven really, then we can't allocate that much in it. And all these big companies, right? I don't think it matters to them the amount they're putting in. What matters to them is the risk that is associated with using something like Curve, which is a DeFi platform which offers a yield, but it's been hacked twice, losing $100 million, like, you know. But if you compare that to the total value locked in it, if it's 4 billion and we lose 100 million, well, that's what, 4% of loss, 4% risk. Do we still make money? Well, if the yield is higher than 4%, let's say 7% yield, then we are making money. Does that make sense? If the risk is 4%, and we're yielding 7%, we're still making money. So they would be, not speaking for any of these companies, by the way. These are my own views, my own only. But companies can put, you understand? Okay. By the way, if you're interested, MasterCard is partnering with Chainlink to be able to buy crypto quickly or something. Use crypto, buy crypto. Anyway. Okay. So today's video is risk management, and one has to think, okay, well, if I put if I have let's say $100, right? well, with $100, maybe you want some Bitcoin for sure. With this philosophy, right? So we're structuring the philosophy. Maybe you have a different philosophy. You're all like Ethereum. Ethereum is big. Ethereum was fucking laughed at for years. Now it's gonna go big. And maybe your philosophy is Ethereum first and the DeFi projects. Okay, well, your structure won't look like this. Your structure will have more ETH than Bitcoin, right? So I hope that's clear. So first, the philosophy. What do you believe in? What do you see? And then risk management. I also have a philosophy in risk management, and these two together translate into numbers that are compared to the 100% or $100. Okay. So let's say you have $100, right? Where do you put it? And we can talk a long time about different ways to put it, but I will tell you about how I currently put it, right? If I have $100 to use, and I want to go DeFi, and I want to go crypto, and I want to go all this stuff, $50 to $60 goes straight to Bitcoin, because Bitcoin is king, right? Bitcoin is digital gold. To me, when people talk like that, it's clear that the sentiment is that this is the best digital asset you can get. So in that sense, I need not just a bit, but a lot. Because it seems everything may come back to it. And everything kind of does, you know? As this goes up, everything goes up. And as this goes up, it's funneled in here. Anyway. So let's go back to your example. You have $100 you want to put, and we're going to be talking USD here, just to simplify it. $50 in Bitcoin, that feels solid. You know, if I just have $10 in Bitcoin and $90 in everything else, as everything else moves more than Bitcoin, maybe I'm uncomfortable with that. You know, maybe it swings too much, you know? Or maybe you put your money in ICP, fucking Comp here has been hacked twice, Dogecoin is already like almost $1. Why would you put your money in, you know, maybe you're in other project BNB, but that depends on Binance. If it's not doing well, then this goes down. What if Ondo is not real? Like, you know what I mean? If you put 20% in something and it goes down, then you lose. You know, are you comfortable losing 10% of that on one project when you could have put most of it in BTC and lost what? Maybe lost 2%, or maybe not even 2%. Maybe you went up and then, but Ondo did wrong and went down, right? So that's why I have this structure, because I have felt it. You know, I felt projects going up, being rug pulled, and you know, buying things that you never see the light of day, you know. So I like blue chips. I like solid things. And the main project, right? So top 10 blue chip. Top 10 is blue chip. Top 20 is very good, you know. So let's talk numbers. Yeah, let's maybe we go up a notch. Maybe we go up a notch. So let's say you have $1,000 to invest. Okay, that's more realistic. 500, you do half of my numbers. And 1,000 is easy to work with, because what's 1% of 1,000? Well, that's $10, right? So for example, I would have 1% of my 1,000. I guess I can type here. What's 10% of is always a times. What's 10% of 1,000? Well, 10% is also 10 over 100, which is also 1 over 10, which is the same as 1,000 divided by 10. Oh yeah, for 10%, sure, Charles. Then it's 100. 100 is 10% of 1,000. That's not the question. The question is, fucker, 1%. What's 1% of 1,000? 1 over 100. You multiply that. You're allowed to divide this by 100. It's the same thing. Cancel zeros. You've got $10. 1% equal $10 if you have $1,000 to invest. So that would be $10 here, $10 here. The 0.2 you can see, but it doesn't matter here. It's just 1%. So I'm gonna just work things out for you. Can we grow this up? Brush, yeah, sure. What's the size? Where's my size, man? It used to be the size here. What is this trash? Are they making paint worse, man, over the years? $10. And what are those? Well, these are just projects that I believe in. Or not that I believe in. Fuck, I don't believe in. I don't know if they fixed the fucking hacks here. You know what I mean? But it's DeFi. You know, and I know that DeFi is fucking big right now. Bro, it's not a percentage, it's money. Dollar. Right, so 0.5 is half of 1%, and so 0.5 is $5. It's good when you like numbers. You know, if you've played with numbers, especially, like, I love percentages. You know me, I love simple math, quick math. You know? So, for example, that's comp is DeFi that's been hacked. I'll put $5 if it goes up, and if it's, I don't know, maybe they fixed it in the past 2 years. I don't know. Then $5 can become $50. Okay. Or internet computer. They keep adding to it. They're serious about it. And you know, AI is coming, and so the ability to compute things with AI, and it's like the Google of the blockchain. It gives you simple services, messaging, emails, text, maybe some media platform, social media, calendar, all the kind of Google apps you have on your phone. ICP will be able to do. You know, Curve, same as comp. Right, so 0.5, that's $5 if I have 1,000. USDT, just stable coins for me, right off. But I'll put 6. Doesn't matter. Litecoin, okay, let's follow the percentage. This is $13. This is $15. You see what's going on here? Oh fuck, man. This is $16. You see, these are fucking. Anyway, the numbers, they're easy, right? With $1,000 invest. If you invest 500, then you cut that all in half, you know? Okay, so does that make sense to me? Yes. Like for example, Dogecoin is the most successful meme coin. You know, if it goes down 10% or 20% even, then I lost $2, right? And that to me is much less worse than losing $20 or even $200 on Dogecoin because it went down 20%. Okay? And this is just a feel for things. And some people will be heavily invested in Doge, you know, or they'll be heavily invested in anything, but anything can happen to that chain, or any bad news can be related to that chain, or no activity, or nothing special happens for a long time, right? And the price just goes down. And it's no one's fault, I would say. And so my strategy incorporates this, not only short time money down, but also long time, over 2 years. Money goes down 50%, if not more, right? What am I comfortable over years losing, right? I don't think I'm okay with losing a lot. So I'd rather, so for example, I'm okay with losing maybe 50% worth of ETH because I know ETH is the best, right, for DeFi. I'm okay losing 50% for the next 2 years on Bitcoin because I know that it still does 150% year over year. Okay? But am I okay with fucking losing my cash on Litecoin because nothing's going on, right? Or Ondo if it's a scam, you know? No. So years of experience has brought me to where I am here. And you don't have to adhere to this. You know, this is just kind of my breakdown. But that's what I like. I like to have a big percentages in what matters. Let me take out Blink for a second. Like for example, this is top 5, right? Add the percent, and you'll see as some of you maybe want to play with these numbers that I'm showing you, and you're like, oh shit, if you add 55% plus this, it says 13. We'll do 13 plus 5 plus 4. What does that give you in terms of top 5 crypto? 68 plus 9, 77% of my $1,000 is, for example, top 5. Well, that's pretty damn solid, you know, compared to meme coins and other places. That means $770 of your money would be in solid top 5. You know what I mean? That's damn solid compared to putting this in something more risky, right? And then after that, it's not even that risky. What I have here is Link, right? So Link Chainlink, you're gonna if you go down that rabbit hole, Chainlink is everywhere where the government is. Okay? And so for me, Chainlink will enable this. Today is the 11th of July, 2025. And I think Chainlink can bring this market from 2 trillion, and it's their goal to bring it from 2 trillion, or 3.6 trillion is the market cap, 200 trillion or so worth of asset on chain and tokenization and all that stuff. Because crypto is speculative, like the guy said at the very beginning of the video. Very speculative. Does produce results, but bring stocks to that, bring commodities to that, bring other financial products to that, and you grow that number from 3.8 trillion market cap, right, to 100 trillion or so. That's a 25x from here. It may take 5 to 10 years, but it starts today. Today and this month and last month and the past month. And that's how crypto grows, really. How when money comes in, confidence, risk assessment makes sense, money flows in. And then the Bitcoin goes up. Yeah. And then here they're like, oh, well, risk assessment is like 95%. We yield 10%, or 25 or 50%. Put your money in. Grows the value of everyone's asset. And so there's this wisdom in my structure, wisdom from time being in this stuff. Because I put, I don't know, $50 here's worth of Binance, because you're like, yeah, I really believe in Binance. I love CZ. CZ's Canadian. Vitalik is Canadian. I'm Canadian. I'm happy with that. Yet, we still don't have clarity in this country over crypto asset. But usually it comes. We've been following the Western world's legislations a lot, right? And I remember a time when in this country we innovated a lot. The spatial station arm, for example, is Canadian. I feel like we were inventing a lot in the 80s, the 90s, especially 90s in Canada. But here comes technology, and I expect standard current definitions come, but pressures as well from under upward, and that will come. Now we can talk about all of these points because I know a little bit of them. Cardano, for example, that's blue chip, but it hasn't performed much, right? So you have $18 Cardano, and the question is, are you okay with that? Is that okay with you? That amount? Do you sit well? Does it sit well with you? Maybe you want more Doge because you believe more in it. Maybe, but and that's your choice. Here we have $20 worth of Aave, the #1 DeFi platform. $38, for example, in Link, right? Again, that's for those who have skipped. This is for, like, let's say $1,000 worth of investment. Yeah, so you just put $1,000. That would be 500. Or let's do 550. In BTC, 130. You see that I'm simplifying a little bit. 50. Sure, I'll leave it. 50 $4 of Solana. And and the question is, does that sit well with you? Right? Are you okay with $43 of Ripple? You just have a Tau. You just have a Tau. You put a Tau. You move your Tau. Coinbase can help you, convert money one to another. All these platforms can help you convert. Let's say you buy $1,000 of Bitcoin, then you want to convert it into some Ethereum and some Ethereum. There's the convert tool, which is something that we didn't have 10 years ago. We had to go on exchanges and work the market, and now they help you do it for you. They use the convert, right? So does that sit well with you? And if it does, then I invite you to consider what you're seeing here. And you'll notice that, for a lot of projects, we have 1%. Like, I'm not kidding. Like, these are my top 5, top 6 projects. And it goes from 50-some% to 2%, and then 1%, and then 0.5%. And then in the other here, I have only 5%, which represents $57. That is distributed in the amounts of 0.5% all the way down to 0.25%. And that's what, $5 to $2.5, right? And even less than that. And I want to go and talk about these numbers as well. But let's pause here before I go into the small numbers. If that resonates with you, if that makes sense, I'm glad. This video won't be in vain. But maybe you disagree. Maybe you disagree with this. You're like, no. I have $1,000, and you're telling me I have only $100 worth of Ethereum. It doesn't make sense. I'm not here for that. And I'm like, okay. Well, okay. Maybe you don't want that many projects here, right? Maybe you don't like to diversify. That's just my thing. I like to buy everything, but and own like a buck of this and a buck of that. But you're gonna have then maybe more than 12%. Maybe you can go to 20 or 25%, and then have 200 to 250 or even $300 worth of ETH, and you're better off, right? But that means you're taking these percentages and you're not into a lot. So I think for someone who starts, who begins, you'll definitely see these numbers, right? You'll see 50% Bitcoin, 25% ETH, 10% Solana, for example. Let's do 8% XRP, 6% Link, and you probably need some Aave too, because it's #1 DeFi, no hacks. They keep working on it. Security is important for them, like really important. Let's do 4%. Okay, what's the total? What's the total here? 55 plus 25. That's 80, right? Plus 10. That's 90. 98. 104 plus 4, 108. We're close. We're at 108%. So you're wrong by 8%. Okay. Well, then you need to cut somewhere. You can't have 108%. You need to cut somewhere. What are you going to cut? Well, maybe, if you're more ETH, you want to go less Bitcoin. Or maybe you don't need 4% Aave, because a lot of people will have a 3% per company in their portfolios when you do stocks. Okay, well, if that's 3%, then Link, even though they are talking to the president of the United States every week or so, let's go 5%. Maybe you want 4%. Oh, yeah. You're conservative. You are conservative. 4%. 3%. 6%. And then let's try this. So we remove 1, 2, 3, 4, 5. 6, 7, 8, whatever. You get the point. You have to be at 100. And so maybe that's your portfolio. A lot of people have six things. I just like to have like a book of this and a book of that. And the main thing for me is, does it sit well, right? And as you move money around, you go. It's like a chart. I've seen the chart. I had a chart. I'm not kidding. Like it was going like this, and I saw that I invested a lot, then I invested much less, then I came back up, I came back down, I came here, and I kept like this. And it was something like just the amount over time, right? So it starts at 0, and then I went and had like, I don't know, 2 times more. Oh my god. Cool. I had 2 times more here than I currently have. And then I went down to like 25% of what I currently have. And I said, no, that's way too low. That's too high. I felt like it was too high. You know, like if I have, I don't know, $100 worth of Doge, right? And Doge comes up here, right? We have E, and then it says $100, right? And then you're like, okay, what the fuck? I have more Doge than like this coin here would be like up here. I have more Doge than Solana. And you're like, does that sit well with me, man? You know? And if it doesn't, what does it mean? What does it mean? And so, interestingly, the internal dialogue gives me like direction. Right? It's a compass, isn't it? And so you go and you take out, you know, $50 or $90 worth of Doge. You're like, Doge, I don't give a fuck, man. What the fuck? It went up, it went down. So I went down here. I'm like 25% worth of the Doge, and I'm like, maybe I should have kept more than $1 worth of Doge, because Doge matters. You know, meme coins matter, and we have faith. You know, that Doge to $1, and we're part of something. We're buying into something, and you buy Doge. Like, okay, well, it's not. I don't want to be at $1, because if you're at $1, then you're like down here with the other things, and you're like, why is Doge down here? Doge is not an unknown for many. Doge should be way up here. We come back, right? We went to too much. We went to too low. I put some. Maybe I would take some out because I don't like risking $25 worth of Doge, because I find it swings a lot. So I settled with this. And then Doge as well settles as it goes up and down the list. You know, you're like, well, you know, is Doge more important than BNB or Litecoin or Ondo? Well, I don't think it's more important than Ondo or Uni or D's. You know, and then you wonder what's pushing up Doge. Is Elon talking about Doge? Is Elon favorable in the populace right now? What's pulling down Doge, right? And you can do the same with all of these coins. Is the government talking with Ondo? And who else? Big companies, billions of dollar asset management, and what's pulling down on though, you know? So yeah, if anything, I would hope you keep that in your system, you know, um, as an object that moves in your system, and is verifying these amounts. Okay. Um, does it sit well? The biggest question. And for that, does it sit well? You kind of have to put those in different positions, right? Well, does it sit well if it's over here? For example, where should it be compared to others? Huh? That's a does it sit well test. There's other ways to see it, right? Does $10 out of 1,000 sit well with you when you compare that to 90, for example? Does it sit well? And you can do another thing. You can say, well, do I want $10 in Doge or do I want $10 in Tesla or Robinhood? Does it sit well, right? And you will find your strategy, and you will make mistakes, and you will have lessons. Okay. I know I'm long, but I'll keep going. So at some point, we reach this category here. So this is going to be a very personal kind of part. A lot of people don't agree, but I own 100 coins, 200 coins or so, because I like to have not 1% of my portfolio in it, but tiny amounts, right? We're looking at 5%. That says 5.7. That's a percentage. And sometimes I wish it could be like 3% or something small, but it's just for these. It's just, I call it charity personally. It's charity, dude. Just put the money where you want, type thing. And these don't represent any of the money. It's just the price of each coin. So if I want, I don't know, $3 worth of this, $4 worth of this, $2 worth of this, $1 worth of this. Like Bonk, for example, can be a meme. Like it is possible. And when you go on Robinhood or Coinbase, you can buy Bonk. So that's an opportunity. We couldn't buy fucking altcoins 5 years ago that easily. You had to go to different places, be part of an exchange, and maybe you see a value in it, right? PancakeSwap, that's an exchange on Binance. Maple, I'm Canadian, I like the name. Artificial, super intelligent, artificial, they're still working on things, so I'll give them $1, Phantom Wallet, everybody talks about that. I'll give you $1. Because my dollar can 10x, right? This is crypto, it can. And so I like having kind of a toe in everything. But yeah, it can be 50 cents, And so personally, I like a strategy where I may so I like a strategy where $5 is conviction. These are all US dollar. $4 is conviction minus what's the word? Volatility, maybe. Let's say you believe in something, can make it. This is the can make it. I think we're gonna call it that. Can make it. Could, can, not will, but can. You if it's a will make it, you might as well, you know, like even Litecoin. I don't know if it's gonna make it. Ondo, I think, will make it. You know, they'll grow. Uni will make it. Cardano, I'm not sure personally. Ave will make it. They are making it, you know. But when it comes to like small things, that this one is Act, this one has too big of a community push. It's kind of weird, and this one is a fork of Bitcoin. There's many types of alternatives like Litecoin. This is why Litecoin going down, by the way. I think there's too much. There's fucking this, and ETC. There's too many like alternative cash alternatives to Bitcoin that I think the market doesn't know what to buy. Do we buy Litecoin? Do we buy BCH? Do we buy ETC? Anyway, can make it. Let's take an example. Yearn. Yeah, Yearn Finance, right? That's DeFi. They are very small. Weird price for their coin. I don't know. They fucked up their launch or something. Can make it because it's DeFi, right? Especially like short term, mid term, or long term. Short term, can they make it? Totally, dude. Everybody's in DeFi today. Like everybody likes it. DYDX, that's an exchange, right? They have not been doing a lot that I've heard of. Okay. Can they make it? Yes. And not only that, like exchanges, by the way, the reason why I have here Uniswap, that's an exchange. Well, BNB sits on an exchange. Which ones? I mean, OKB is an exchange. About Robinhood, I'm gonna buy Kraken when they get on the stock market. Jupiter is an exchange. Optimism and Arbitrum supports exchange. And the reason why I give a fuck is because of Robinhood. Robinhood is everywhere. They're gonna grow. They want the tokenized stocks to funnel through them. Kraken gets it. Kraken wants to be on the stock exchange. Kraken gets it. And all these other exchanges, where's Uni? Uni gets it. It's an exchange. It wants to do the same thing, I think. And I think the exchanges get it. The exchanges, so many exchanges fucked up, dude. And right now it's clear. It's a much clearer picture for the exchange. They are going to make such bank, all right? Not even funny. So that's why I like Uniswap, okay? That's why I like exchanges and anything that supports exchanges. So wherever I was, DYDX can make it. 1inch is an exchange, can make it. Hasn't been performing. Forget FTX, that's dead. That was an exchange. They fucked up so hard. Just a few years, and they could have made such money, dude. So dumb, dude. Pepe, right? Pepe, yeah. Pepe was big. About $1 worth of Pepe. Baby Doge, you know, just kind of can make it. Can make it. And for me, Joe's an exchange. I mean, all these have different value proposition, right? Flow is like made by people that worked at Facebook. Sui, for example, Sui. people that worked at another like big tech and say does more transactions than Sui. So they all can make it. And so I use this strategy where I say, okay, well, I can't be putting like it's not a proven thing like Doge. It's not a proven thing. Okay, nothing is proven over here. I think, with all due respect, of course, compared. This is not proven. There's nothing proven. Uni's pretty proven, right? Battle tested, Cardano, etc. And then proven on this side as well. Okay. And then my portfolio says, well, I'm in DeFi, I'm in internet computer. I believe in it. I believe in, you know, or I have faith. Which one it is. But I like to give these small amounts. Now 5, 4, 3. I don't tend to give those amounts often. 3 is very possible. Okay, the same way. I'm gonna laugh at this. The same way that Polygon was like proven, right? But Polygon went down 74%, right? Algorand, made by MIT, and such and such. Luckily, we're up 14% today or yesterday or this week because of all this. But it was down like 50% and more. Okay. Can I click this? Sure. So it went up a lot. 22 cents, 17 to 22. But I look at it and it's like, okay, well, it was 12 cents for a long time. And a lot of people liked it for like, what is it, 2-year span here? 30 cents, 20 cents. You know, do you give a fuck about technology, compliance? It's MIT, bro. But then like we didn't hear much about them. It just kept going down. So some big ones will go down. So $3 very possible. But question mark as to will it continue? Like let's say you hear good news, a lot of good news, a lot of good marketing, a lot of good partnerships. But will that continue on the span of 2 years or 4 years? Right? We don't know. You don't know. And anything that I don't know anything much about, let's say I don't know much about, but I hear good things about them. So for example, Stellar. I know Stellar is competing with Ripple, but I don't know much about it, right? Now, these are different examples a bit, but like Stellar, I don't know much about. Adera, I don't know much about. It's been around though, but it's been proven. Near, I don't know much about them. BitTensor, don't know much about them. / they've been around. / people believe in them. / they're gonna get their ETF. / Trump's buying them. / you know, all this thing makes it so that I want a number between $1 and $10 worth of it that sits well with me. Okay. So what happens? Well, you have to put them in kind of in an order. So HBAR, most known, and then Aptos probably comes after, or even Near or Stellar, I think, would come after. And it kind of has to look like that in my portfolio. Like it's supposed to look like this: HBAR first, Aptos or Stellar. You know, so more conviction, more good news, more partnerships, more ETFs should be above. And some people don't believe that. They like to gamble on one and go like big on Stellar because of one factor. But I prefer, in terms of risk management, multiple factors, multiple arrows, different arrows pointing up and what's pointing down. So that's one thing. And now we move to last part of it. So $2 will be $1.50. I still have 50 cents investments, right? So what's $2? Well, $2 less than $3, which was also very possible, but question mark. So $2 is like good tech, you know, good tech, but not proven. Not proven / other things. $1, and this, by the way, is long term. Like I'm gonna hold this for a long time, you know. $1 is I like. $1 is I like. I like could be anything. It could be Elon coin. It could be. Let's find an example here. Fart coin. I like. Mantle, right? Mina. They are like competing with the internet computer. I like. Orca. It has an orca on it. I like. 1 inch. It's a unicorn. I like. Pepe. I like. Its name is Joe. I like. You know what I mean? Like, I don't give a fuck. Like, if I can trade it on Coinbase, I'll just put $1 in Oasis. I like. Basic attention token. They make a coin so that the ads that display on websites pay you back in basic attention tokens. Up 12% apparently. It was down more. I mean, technologically wise, I like. Zello, they want to use cell phones with blockchain. So blockchain powering cell phone tech, distributed ledger, number registry, you know, whatever I like. Sweatcoin, walk, make money, I like. Chili's is sports, crypto, I like, but I don't know anything about sports. Stacks, you can make yield on your Bitcoin, I like. Metis is managed by Vitalik's mother, or was. So Vitalik is offering some support to that company indirectly. I like. BitTorrent, that's the whole point of this peer-to-peer tech. I like. You know, I like, but it's not going anywhere. And I'm not going to have fucking 10, 15, 20, 25, 35, 55, $100 go down 23%. Look at this shit, right? These are smaller project, and they swing, man. They swing. Yes, they can do 100x, but they can go down 90%. Let's find one. 80% here. Sweatcoin. It didn't work out. I don't know what's happening with OK. Maybe they got banned everywhere, but bad value. Chili's you can do it, buddy. I believe in you. But why is your logo still this? You've changed logo. 93% Moonbeam here. It's like video game blockchain stuff, or you know, video game economy things. You know, I can't put $15 in Ryoshi because I like it and I think it's the next meme coin when it's down 90%. And so these don't have the arrows. Oh, look, an elephant. These don't have the arrows behind them that others will, and so that's why 50 cents is like, this is absolute charity, and that is my risk management, right? And yes, for a lot of people this sounds dumb, bro. You're telling me you're buying $1 worth of coins on Coinbase. You're doing this all the time. You're changing $1 here, $1 there. Yeah, man. Girlfriend thinks I'm cute, dude. And it's crypto. You're either in it or you're not in it. If you don't have that $1 or 50 cents, you know, in 5 years, when Energy Web starts picking up, or Superverse starts picking up, right? Or Pepe, or maybe the Ethereum name service, or let's see. Trying to think, which one am I thinking about? I don't think it's that high. You don't have the $1 in it, you won't make the 10x, you know? You won't make the 100x or the 1000x. And I've been here enough to know that it's possible, you know, and for that 50 cents to do 1000x. Because I got Pepe before it blew up, right? But then I sold it too. So I have bad luck too. But it exists. It's here. It's true, and it happens. And you have to be patient. But I'm willing to be patient with 50 cents. You know. And so that's why it looks like this part here is fine. 5% of my portfolio and all that. Because if any of them goes up, it pays for it. But, you know, that's my risk management. So I hope that was interesting. I hope you enjoyed it. Questions in the comments below. There's always more to talk about. And I would say experience with it. And as long as it's not custody, backed by your country, if something goes wrong, then self-custody is the best. And for all these crypto, you probably won't do self-custody unless you have a specific self-custody wallet. And you should have a little bit of money on the exchange, but the rest you would bring to your self-custody wallet and save your seed phrase, your 12 words, or else you'll make all the same mistakes we all made, man. Alright, lost our wallets or seed phrase or passwords, hard drives fail, fucking. Alright, learn from everyone's mistake. Don't be too deep in memes, and have some solid ground. But yeah, I welcome the. So for an example here, $1,000 worth. That's the structure. I hope you enjoyed it. It was interesting. We didn't see any formulas, risk management formulas, but I don't need them. For me, does it sit well? Matters. Okay, have a good one.